YouTube, I'm back finally with another video. So today's topic is going to be on the ICT Silver Bullet model. Now, a lot of people were asking me about how to trade Silver Bullet model. This is the time-based model I was trying to reveal to my people, but I was late, right? But it's okay. I will be just teaching you today the ICT Silver Bullet model. If you're a little bit having knowledge of Silver Bullet model, it's okay. But if you're new to this, then we must be understanding what is actually the Silver Bullet model, what it is. So simply, the Silver Bullet is a precise trading strategy based on exploiting time window, a specific time window, right? In this time, price will either seek liquidity or rebalance the imbalance. We have this overly time window, right? We have some of the specific session timing window where we look for the 1 hour time, which is the Silver Bullet time window, right? So the timing of the Silver Bullet model are simply we look for in London session we would be simply looking for the 3 a.m. to 4 a.m. right? This is the macro. This is the window where price seeks for liquidity, right? We see the energetic moves, right? 3 a.m. to 4 a.m. And we have another Silver Bullet time window, which is the New York AM Silver Bullet time window, which is it starts from 10 a.m. to 11 a.m. And we have another New York PM Silver Bullet time window, which is starts from 2 to 3 p.m. We would be simply looking for these time window. Now, a lot of people were asking me which time, not the country, not your country time window, right? And if you're from Bangladesh, Pakistan, India, or any other country, you don't look for your time window based on, right? So simply we would be looking for the Eastern time window, which is the New York time window, not your Pakistani or any other, right? So the high probability conditions of the Silver Bullet time window. The price should align with a high time frame PDRA, such as fair value gap, auto block, or any other high time frame key level. Now, after reaching high time frame PDRA, look for market structure shift on a lower time frame. We will be waiting for the displacement and take entry from the first fair value gap, aiming for the opposite side of the direction. Let's understand this topic through the depictions. So the Euro USD 15-minute chart, right? We have this fair value gap which have been filled, right? So we want to see simply these lows should be taken out, right? So simply we are trading the 10 a.m. Silver Bullet time window, right? So simply we're trading from the 15-minute time frame. We have the high time frame fair value gap, and simply we would be just looking for the 1 minute time frame, right? So simply marking out the 10 a.m. right there and 11 a.m. right there. So we simply looking for the price to trade into this fair value gap, and then we'll be simply looking for the time window, and then we would look for the possible entries, right? So let's see right there. So now we have been reached into our time window, right? We have taken out the buy side liquidity, right? And we would be simply waiting for the market structure shift. Right now we are in the fair value gap, which is the 15-minute fair value gap, and then we have these lows, right, which are the equal lows if you look up at these previous lows, right? So simply we would be waiting for the market structure shift with displacement. Now displacement is equal to fair value gap, right? So we have this swing low. We want to see price to trade below it and give us a fair value gap, right? So let's see. So now if you look up at this, we have simply taken out the swing high with displacement, which is this fair value gap, right? A little fair value gap. So we would be simply entering from this fair value gap, and then we would be simply putting our stop loss above this high, and then we would be simply looking for this low or this low, right? So let's see what is going to happen. With the shift, we have the fair value gap, we have taken out the highs, we are into the premium fair value gap, right? And then we are simply going for the discounted zone, right? Let's see. So now if you look up again, we have this in other fair value gap, and also we have these these lows remaining as withdrawn liquidity. So simply we hit our TP in that time window, right, we hit the nice entry. So this is the end of the example, right? We have been bearish, right? We have these equal lows, right? So we simply would be marking it out. And then we have this fair value gap, or you can be considering it a break block, right? We have this fair value gap and break a block. We have been just trading lower and lower, right? Our bias is bearish. We have the shift in the structure, and then we simply would be looking for the 1 minute time frame. This was the 15-minute time frame, and this is the 1 minute time frame, right? And simply we will be marking out the 10 a.m. and 11 a.m., right? So let's see what is going to happen. We have this buy side liquidity, also this buy side liquidity, and also this fair value gap above these highs, right? Let's see what is going to happen. So simply we have took out these highs, right? Which is this high right there, took out the buy side liquidity, hitting the fair value gap again, and then we are simply going lower. Let's see what is going to happen. So simply we have shifting the market structure, and then we have this fair value gap right there. Let's see if price is going lower from this fair value gap. Why? Because we are just trading the silver bullet time window. Let's see what is going to happen, and then we will be simply targeting these lows, are simply these lows right there. Yeah, so target hit,